Bitcoin is entering a notable correction phase. Over the past week, its price has dropped by more than 4.3%, now trading around $110,186, down from the recent peak of $117,000 earlier this month. This decline isn't just short-term volatility. It reflects a series of technical and sentiment shifts taking place across the market. The most significant factor driving this movement is a large-scale sell-off by a whale wallet, unloading roughly 24,000 BTC. This sudden action triggered a cascade of automated sell orders across major exchanges, causing a sharp price drop in a short time frame and temporarily draining liquidity. At the same time, many retail and institutional investors took the opportunity to lock in profits after Bitcoin's strong rally from the $95,000 range to over $117,000 throughout August. Amplifying downward pressure. From a technical perspective, Bitcoin is currently testing a key support level near $110,000. Should this threshold break, the next support zones lie between $105,000 and $108,000. On-chain volume and derivatives. Data suggests that buying strength is not yet sufficient to reverse the downtrend, while an uptick in futures trading volume indicates a market leaning toward a deeper correction, possibly testing the psychological level at $100,000. However, the broader long-term trend remains constructive. Bitcoin ETFs continue to attract steady institutional inflows, and on-chain accumulation data shows that large holders are not reducing their positions. The MVRV, market value to realized value ratio, remains within a neutral zone, signaling that the market is not in an overbought state. This suggests the current dip could simply be a healthy correction within a longer-term bullish cycle. For short-term traders, a defensive strategy is recommended, closely monitoring support zones and avoiding excessive leverage amid high volatility. Long-term investors, on the other hand, may view the $105,000, $110,000 range as an opportunity to accumulate, provided strict risk management protocols are in place. In the context of sustained institutional interest and growing global demand for digital assets, this pullback might be less a sign of a prolonged downturn and more an opportunity to rebalance portfolios ahead of the next potential uptrend. Current state of Bitcoin's price movement. Bitcoin is experiencing a notable pullback after weeks of strong momentum. As of now, the flagship cryptocurrency is trading around $110,186, reflecting a 4.3% decline over the past 7 days. This marks the first significant correction since Bitcoin rallied past the $117,000 mark, which had been its highest level this quarter. This pullback is particularly significant because it signals a shift in market sentiment. After weeks of relentless upward momentum driven by institutional buying and positive macroeconomic signals, the market is now pausing to reassess. Traders are increasingly cautious as short-term indicators point to overbought conditions being corrected, while the absence of strong new buying catalysts is slowing upward momentum. From a macroeconomic lens, global liquidity and interest rate expectations are playing subtle roles. While expectations of rate cuts have fueled risk-on sentiment in recent months, mixed signals from central banks have added uncertainty, which in turn affects high-risk assets like cryptocurrencies. In terms of market microstructure, trading volumes have declined by nearly 12% week over week, indicating that the current price action is less about aggressive selling and more about a lack of strong buying interest to support higher price levels. However, volatility remains elevated, with intraday swings of 2% to 3%, showing that speculative activity is still very much in play. This correction is not entirely unexpected in the context of Bitcoin's historical behavior. After rapid price surges, Bitcoin has often undergone short-term retracements of 5 to 10% before resuming its primary trend. For traders and investors, The key question now is whether this pullback represents a healthy consolidation phase before another leg up, or the start of a deeper correction toward more critical support zones. Key drivers behind Bitcoin's decline. Recent 4.3% drop in Bitcoin's price is not random. Volatility. It is the result of a convergence of market dynamics and external factors. Understanding these drivers is essential for both short-term traders and long-term investors to anticipate the next moves. A whale sell-offs trigger market shock. The most immediate and visible trigger came from a massive sell-off by a whale wallet, offloading approximately 24,000 BTC in a single transaction. This large-scale liquidation caused a sharp liquidity imbalance, overwhelming buy orders on major exchanges. Automated trading systems, including stop-loss and algorithmic bots, were triggered, creating a cascade of sell orders that intensified the downward move. Within just 20 minutes, Bitcoin's price plummeted from around $117,400 to roughly $111,100, leaving traders little room to react manually. This whale activity highlights the fragile balance between supply and demand in the crypto market, where even a single large transaction can ripple through the ecosystem due to its relatively thin order books, compared to traditional asset classes. B. Profit-taking. After a strong rally, Bitcoin's rise from $95,000 to over $117,000 within a few weeks created ripe conditions for profit-taking. Short-term traders, hedge funds, and some retail investors locked in profits near the highs, exerting consistent selling pressure. Historical trends show that such profit-taking phases often follow steep rallies, especially when momentum indicators like RSI enter overbought zones. This behavior isn't necessarily bearish. Instead, it signals a healthy rotation as investors rebalance portfolios while waiting for new catalysts to drive the next leg upward. C. Shifting market sentiment. Market psychology has shifted notably. The fear and greed index, which had hovered in the extreme greed zone for weeks, has now dropped closer to neutral levels, reflecting growing caution. Social sentiment on platforms like X, Twitter, and Reddit shows mixed narratives. Optimism about institutional inflows, but growing fear of a sharper pullback if key support levels are broken. This sentiment shift often precedes short-term volatility spikes, as traders react more emotionally to both downside and upside movements. Macro and odd. Regulatory overhang. Global macroeconomic uncertainty and regulatory developments are also influencing price dynamics. Interest rate expectations, with central banks sending mixed signals on rate cuts. Risk assets like Bitcoin are experiencing heightened sensitivity to macro headlines. Regulatory news. Ongoing scrutiny of crypto exchanges in the US and Europe has created headline risk, reducing confidence for leveraged traders and institutional allocators in the short term. Overall, these factors combine to create a perfect storm for a temporary correction. Though the underlying demand drivers, particularly from institutional players and ETF inflows, remain intact for the long term. 3. Short-term outlook for Bitcoin. The short-term trajectory of Bitcoin is entering a critical phase where price movements in the next few sessions could determine whether this is merely a healthy pullback or the start of a deeper correction. A. Key support and resistance levels. Immediate support. Bitcoin is currently testing the $110,000 zone, which has acted as a strong support in previous pullbacks. Secondary support zones. If the $110,000 level is breached, the next levels to watch are $108,000 and $105,000. Below that, the psychological $100,000 mark becomes the ultimate defense level. Resistance levels. On the upside, Bitcoin must reclaim $113,500 to regain bullish momentum, with $117,000 as the major ceiling to break for any continuation of the previous rally. B. Technical indicators RSI, Relative Strength Index, currently trending around 48 to 50, suggesting Bitcoin is neither oversold nor overbought. A signal of consolidation. MACD, Moving Average Convergence Divergence. The MACD line is showing a bearish crossover, often interpreted as a sign of continued downward momentum unless reversed. Volume profile. Spot trading volume has declined by 12% week over week, while derivatives activity has spiked, indicating speculative bets on further downside. C. Market sentiment. Short-term sentiment is cautiously bearish, the Fear and Greed Index dropping from extreme greed to neutral, reflects the market's hesitancy to take aggressive long positions. Funding rates on major futures platforms are approaching neutral, suggesting a reduction in leveraged long positions, another sign of cooling. MONENTUMD scenarios for the coming week. Consolidation above $110,000. Base case to 50%. Bitcoin holds above $110,000 and trades sideways in a tight range between $110,000, $113,000. Building momentum for the next breakout. Retest of lower supports. Bearish case -35%. If $110,000 fails, Bitcoin could quickly slide to $105,000, $108,000. A level where institutional buyers may step in to accumulate. Quick recovery to $115,000 plus. Bullish case -15%. Renewed institutional inflows or strong macroeconomic catalysts could trigger a sharp rebound, retesting the $115,000, $117,000 zone. Strategic takeaway. Short-term traders should maintain a defensive stance. Avoid over-leveraging and consider setting stop-loss orders below $110,000 to mitigate downside risk. Swing traders, watch for price action around the $108,000 level. A strong bounce there could signal a medium-term buying opportunity. Long-term investors, use any dip toward $105,000, $110,000 as a chance to accumulate strategically, but remain disciplined with position sizing and risk management. Long-term outlook for Bitcoin. Despite the short-term volatility and the recent 4.3% pullback, the long-term fundamentals of Bitcoin remain strongly bullish, supported by macroeconomic trends, institutional adoption, and on-chain data signaling. Sustained accumulation. Institutional demand and ETF inflow. Steady ETF inflows. Bitcoin ETFs continue to see consistent net inflows, with cumulative assets under management now exceeding $70 billion. This institutional participation adds a strong demand floor, making each dip increasingly short-lived. Corporate accumulation. Companies like MicroStrategy are expanding their holdings, with its recent purchase of over 3,000 BTC signaling long-term confidence. This steady corporate adoption reduces the circulating supply, contributing to structural upward pressure on price. Institutional presence also enhances Bitcoin's market maturity, reducing volatility compared to past cycles and attracting even more traditional investors. On-chain metrics point to accumulation. Key blockchain indicators show that long-term holders are not selling. Supply held by long-term holders. Over 75% of circulating BTC hasn't moved in more than 6 months, indicating strong conviction. Exchange balances. The amount of Bitcoin held on exchanges is declining steadily, a signal of accumulation and reduced sell pressure. Realized price metrics. The MVRV ratio remains in a neutral zone, suggesting the asset is far from bubble territory and still has significant upside potential over the medium to long term. Having cycle tailwinds. Bitson's recent halving event is expected to tighten supply dynamics throughout 2025 and 2026, historically 12 to 18 months post-halving. Bitcoin has entered extended bull phases, The combination of reduced block rewards and growing institutional demand could drive prices toward $130,000 $150,000 over the next year, provided macro conditions remain favorable. D. Macro and regulatory environment. Macroeconomic trends. If interest rate cuts materialize in late 2025, liquidity injections into risk assets could accelerate Bitcoin's upward momentum. Regulation. Clearer frameworks in the US and Europe are likely to encourage more institutional adoption while reducing fear of sudden enforcement actions that historically caused market disruptions. Strategic recommendations for long-term investors. Maintain a dollar cost averaging (DCA) strategy to smooth out volatility. Monitor on-chain data to identify accumulation zones around $105,000, $110,000 as opportunities for strategic entries. For institutional players, use market pullbacks to rebalance portfolios, focusing on multi-year horizons where Bitcoin is increasingly treated as digital gold. For cautious investors, allocate a smaller percentage of capital but stay exposed, as long-term trends point to further institutional adoption and higher valuations. Long-term price projections. If current adoption and liquidity trends persist, base case, Bitcoin could stabilize in the $130,000 $140,000 range by mid-2026. Bull case. Strong institutional inflows and macro support could push prices toward $150,000 plus. Bear case. If global liquidity tightens unexpectedly or regulations turn unfavorable, Bitcoin may consolidate between $100,000, $110,000 for an extended period. Strategic recommendations for investors with Bitcoin's price consolidating around $110,000 after a 4.3% weekly pullback. The path forward for investors depends on their time horizon, risk appetite, and portfolio strategy. Below are tailored recommendations for different investor profiles, supported by current market data and historical context. A. Short-term traders, day traders and swing traders. Risk management first. In the current high volatility environment, tight stop-loss orders are essential. Placing stops slightly below key support zones, such as $110,000 or $108,000, can help limit downside risk. Focus on momentum indicators. Monitor the RSI, Relative Strength Index, for oversold signals near 40 to 45 as potential bounce zones. Track MACD crossovers and volume spikes for confirmation of momentum shifts before entering trades. Scalping opportunities. Short-term scalpers can capitalize on 2% to 3% intraday swings, but leverage should remain minimal to mitigate liquidation risks during sudden volatility. Spikes. B. Medium-term traders, swing and position traders, range trading strategy. Bitcoin is currently trading in a wide consolidation channel between $108,000 and $117,000. Swing traders can buy near support and take profit near resistance, adjusting positions dynamically as volume and sentiment shift. Watch for trend reversal. Signals. Sustained closes above $113,500 with rising spot volume could indicate the beginning of a new upward leg. Conversely, a break below $108,000 could trigger a sharper correction toward $100,000. C. Long-term investors, hodlers and institutions. Dollar cost averaging DCA. Continue gradual accumulation on dips. Allocating small, consistent amounts over time reduces the impact of short-term volatility while capturing the broader upward trend. Accumulate on weakness. On-chain data shows strong institutional buying interest around $105,000 $110,000. Any dip to this zone should be viewed as a strategic entry point for long-term growth. Hold with conviction. with ETFs driving sustained inflows and supply, becoming scarcer post-halving. Bitcoin's long-term trajectory remains structurally bullish. D. Portfolio diversification. Balance crypto exposure. Limit Bitcoin exposure to 5% to 15% of a diversified portfolio depending on your risk profile. Complement BTC with Ethereum or top altcoins to hedge against sector-specific volatility. Stablecoin utilization. Keep a portion of capital in stablecoins to quickly deploy during sharp corrections or to hedge against sudden drawdowns. Risk mitigation. Monitor leverage levels. Excessive leverage is a leading cause of forced liquidations. Maintain conservative position sizing, no more than 2x 3x leverage in the current environment. Stay updated on regulatory headlines. Unexpected announcements, especially from the US SEC or European regulators, can cause rapid market swings. Always hedge against regulatory risk when trading in short or medium time frames. Long-term price projections. Despite the recent short-term correction, Bitcoin's long-term trajectory remains broadly bullish, supported by institutional demand, strong on-chain metrics, and favorable macroeconomic trends. Below are 3 key scenarios, from conservative to highly optimistic, for the next 12 to 18 months. A. Base case: steady growth, approximately 50% probability in the base case. Bitcoin maintains a steady uptrend, driven by consistent institutional inflows and wider market adoption. Expected price range: $130,000, $140,000 by mid to late 2026. Supporting factors: continuous inflows into spot Bitcoin ETFs from both institutional and retail investors, expanding adoption in emerging markets, and growing interest from large financial institutions. A gradual easing of interest rates beginning in late 2025. Improving liquidity conditions for risk assets. Bottom line: this scenario represents the most realistic path forward if no major liquidity shocks or regulatory disruptions. OCCURB bull case: aggressive upside and new highs, approximately 35% probability. The bull case envisions a strong breakout fueled by accelerated demand and highly favorable macroeconomic conditions. Expected price range: $150,000, $180,000. Key drivers: sustained long-term accumulation by institutional players and high net worth individuals, reducing circulating supply on exchanges. Deeper interest rate cuts by central banks, fueling a stronger risk-on environment. Rising demand for Bitcoin as a digital safe haven asset amid geopolitical uncertainty or financial instability. Bottom line: this scenario depends heavily on liquidity expansion and a resurgence of FOMO, fear of missing out, driving momentum. C. Bear case: prolonged consolidation, approximately 15% probability in the bear case. Bitcoin faces significant headwinds, leading to extended consolidation rather than a strong breakout. Expected price range: $95,000, $110,000 throughout most of 2025. Potential triggers: tighter liquidity driven by central bank policies or an unexpected global economic downturn. Stricter regulatory frameworks in the US or EU, reducing speculative activity and institutional appetite. A breakdown in market confidence due to high-profile failures or security breaches within the crypto ecosystem. Bottom line: while less likely, this scenario highlights the importance of maintaining disciplined risk management and avoiding overexposure. Bitcoin's recent 4.3% weekly pullback, bringing the price to around $110,000, underscores the dynamic and sometimes unpredictable nature of the cryptocurrency market. However, when examined through a broader lens, this correction appears to be a natural and healthy consolidation rather than a sign of structural weakness. In the short term, Bitcoin faces clear resistance at $113,500 and strong support between $105,000 and $110,000. Price action in the coming sessions will likely dictate whether the market continues to consolidate or enters a deeper correction phase. Traders and short-term investors should remain cautious, employ disciplined risk management, and pay close attention to volume and momentum indicators for confirmation of trend reversals. From a long-term perspective, the structural drivers of Bitcoin's growth remain firmly intact. Institutional demand through ETFs continues to build a strong foundation of consistent inflows. On-chain accumulation metrics signal confidence among long-term holders. The post-halving environment points to reduced supply pressure, historically a catalyst for significant price appreciation. Across all scenarios, whether base, bull, or bear, Bitcoin maintains its position as a core digital asset with a compelling risk-reward profile. While macroeconomic factors such as interest rates and regulatory developments will continue to shape market sentiment, the underlying fundamentals suggest that Bitcoin's role as a hedge against monetary debasement and as a store of value will only grow stronger over time. For investors, the key takeaway is to align strategies with time horizons. Short-term traders should remain nimble and defensive. Swing traders can capitalize on range-bound opportunities. Long-term investors are well-positioned to benefit from strategic accumulation during dips with disciplined portfolio sizing and risk controls. Ultimately, the current correction is less a warning sign and more an opportunity to reset positions, evaluate strategies, and prepare for the next phase of Bitcoin's market cycle. Whether Bitcoin tests $105,000 before rebounding or breaks past $117,000 to retest highs, the asset's long-term trajectory remains upward, powered by institutional adoption, technological maturation, and growing global acceptance.